Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel for our last live session of the day. It's Building a Stock Portfolio, and I am your host, Kevin Horner. I want to thank you all for joining me today. Today, of course, we are going to be running through a look at our existing example portfolio, and we will then be talking about some potential new examples for our consideration. So thanks for being here today, everybody. Thanks for sticking with us for the 2 minutes it took me to get my system up and running here today, but I'm glad you're all joining me. We are joined by my friend and fellow Schwab coach there in the chat, Connie Hill. Be kind to Connie. She's going to be kind to you, give you answers to questions and comments that I'm unable to get to in the moment, but nonetheless, I intend to keep an eye on things there for you, everybody. So please feel free to post in there for the duration of the show. We do go about 40 minutes in total. Remember, if today's conversation is helpful for you, you can always hit that thumbs up for me down below. That helps me out a bit. Obviously, our friend Cam likes to suggest that sounds like applause. He's not wrong. It really does. And it helps us out in the YouTube algorithm as well. So when we review the class and we get it into our archive, that thumbs up really gives an opportunity and lift to show this to more individuals like yourselves. And that's our goal, is to just try and reach as many people as we can. So with that, everybody, let's jump to my disclosures, and we will then get down to business. So please remember that everything we discuss here today should be considered informational and educational exclusively. We do not make recommendations nor endorsements for any particular approach to trading the market. We will today utilize technical analysis as we review the areas and groups in the marketplace. Remember to think of technical analysis merely as just one of your decision-making building blocks, if you will. You can utilize it in your process, but we discourage you from basing decisions exclusively off what you get in the way of technical analysis. It's also important to remember that we work in a paper money version of the Thinkorswim desktop application. As it relates to the scan tool that I use with you all frequently in this class, that means that you may not have access to all of the criteria for scanning, most notably studies. So if you're not familiar with that just basically we encourage you to do your scans in a live version of the Thinkorswim desktop, build your watch lists there, and if you're working in paper money for your development of your plan and your process, transfer your watch lists to the paper money so that you can do that. In the meantime, we'll get down to business with a review of what's been happening in the market. So let me just make sure we get all of our details. There's our paper money disclosure, of course, and we're going to start today with a quick look at how the market finished. It was a little less volatile today, but it sure feels like as oil goes, so goes our market. So let's look at a few key components. I'm going to bring in the S&P 500 here, everyone. You'll see that we remain below the 200-day moving average 4 consecutive sessions, and a lot of back and forth action as I zoom in here. It is important to note that we are below the 20-day moving average, have been for the majority of our days back to February 12. We did have that 2-day window above it. But I'll remind you, if you've been defining your confirmation or what you view as confirmation, this may not have been sufficient to believe that there were more upside in the S&P 500 because you only had 2 days above the 20-day moving average. We had a lengthy tail, and we were immediately back below it. So, from a trend standpoint, we've been under pressure in the S&P, and that's entirely valid. What's interesting to me over these last 2 days is that even though we have pushed the market pretty well, today's low was 65.25, the high 65.95. We had a 70-point spread, but we essentially closed pretty darn close to the open. And the same could be said about yesterday. Our low was 65.65, our high 66.51. That was about an 85-point spread day, and yet we closed very close to the open. So what does that mean? It implies for a lot of traders indecision, and the reminder there is we're not entirely sure about the next move. Indecision lets us know that both the bulls and the bears, particularly today's candle, where we were above the open by a bit, below the open by a bit, and yet neither bulls nor bears were in control today. So it's a wait and see situation. I will happily include a chart that I've been monitoring both on X and in my classes with you all, and that's just a quick review of the future symbols as it relates to the S&P 500, the VIX, and crude oil. And you'll notice that crude and the S&P 500 futures are basically working in inverse lockstep. So as rallies in oil come through, we get drawdowns in S&P 500 and vice versa. The question becomes, can we push oil any higher than we had today, which came in at around 93 a barrel, 93 and a half on the crude light. So if we could push through 93 and a half with oil to the upside, I think we could still witness more downside pressure on the S&P 500. Now, I'll remind you, everybody, we're looking exclusively here at futures symbols, but I am not encouraging or recommending futures, of course. Make sure, if you're interested in futures, that you're going through your requisite steps there. Nothing wrong with trading them if you're ready to go, but you do have to get familiar with the risks and disclosure statement for both options and futures as well. Good point there, Wacky. We've had some moves in the 10-year yield. Thankfully, I say that it didn't close at a new high. I mean, if it did, it didn't miss it by much, or if it did, it wasn't by much. Basically, today it was elevated and then it drew down in the second half of the session, and that may have helped the market a little bit. But the S&P did not, I mean, 1/3 of 1% we were off, and NASDAQ 100 down 0.75%. Russell somehow managed to rally in the face of that 10-year. So that's pretty interesting, because the Russell rallying, let's be honest, it's going to struggle if the 10-year continues to rise, if the yields continue to rise, but that remains to be seen here. Same thing here with the NDX, though. Levels have been established, watching the short-term lows we have created and revalidated as support tests. The question is whether we can hold up here. And obviously, I think it's fair to suggest that if we continue to see risk-off headlines out of the Iran development, well, then we've got risk in our broad market. So we need to be prepared, and we traders should be taking action so that we can be able to manage downside risk here. I talked about this a little earlier today, but ultimately, if you were wondering about the next level of potential support, it could be in the neighborhood of 6,200, everybody. And 6,200 would be about a 5% drawdown from where we are. So not exactly a comfortable move. Again, I'm not suggesting it's going there, but I have to say, we can't believe that the stop level or the horizontal support level that we want to think holds up will always hold. We have to consider, what if I'm wrong? What steps should I take to be comfortable if I'm wrong? Okay, that's the way I want you to give thought to all of this. Okay, so there's your brief broad market review. Let's take a look at our moves today on the sector action. We had leadership from energy, big surprise, not really, up 36% year to date, the best first quarter energy has ever seen. This is an amazing move. It's not fantastic for our markets, nor our inflation numbers, of course, but there are opportunities in energy nonetheless. Now, today I scanned in two spaces to come up with some potential example trade ideas, one of which was industrials and the other technology. So I'm just going to highlight those. Let's just look at industrial on the chart. We're really battling it out at what was former support here. We fell through it over the last couple of days. We did make an intraday lower low here. We're obviously trying to hang in there. It's unclear whether we can, but I found some interesting positions that might offer opportunity in this space. If we were looking for a complete retreat, some traders might look, I meant to make this a line. Let me do this. Some traders might look at the prior highs. Prior highs so frequently act as new support, right? Prior high, former resistance, can then become new support. And the fact that it coincides so cleanly with the 200-day moving average on the industrials, it doesn't mean it has to get there, but if it did, it would look like a potential opportunity to participate in a longer-term uptrend. So we'll see if that plays on industrials. Here's the look at technology. And technology is really hanging on by a thread here, isn't it, everybody? I spoke today earlier about software really continuing to get beaten up a little bit. If we looked at the heat map, let's take a look here. S&P 500, but let's drill in to technology specifically. Yeah, look at that software, just deep in the red all day today. Did not improve. I think I posted on X that one earlier today. Right in the first 30 minutes of trading, and it just did not get better at all. So, and of course, I mentioned X, but I forgot to remind you all, hey, if you're not following Connie and me there, please choose to do so. Connie Hill CS, Kevin Horner CS. We try to post for you there frequently throughout the week and give you a look at a number of charts or concepts, trade concepts and strategies that people might be considering or looking at. So if you're looking for that kind of stuff on Twitter, that's what you'll find from me and certainly from Connie as well. Okay, so let's see. Let's go ahead. Instead of looking right immediately at our new positions, let's, as I like to do, put a pin in the idea of industrials and technology. We'll come back to it, build new example trades, but let's briefly look at our example portfolio and determine whether we need to make some changes here. We entered into Halliburton just last week, everybody. I'm not mistaken here. I'm going to just double check. Let's see. Is this going to give me my, there it is. Yeah, we got going here on the 18th. Yeah, a week ago tomorrow, as it were. So we place all of our orders for the next business day, and the Halliburton one so far has worked out. So let's take a look on the chart. We have built a bracket order evidenced by the bracket indicator right here in the right panel. As you can see, we've got our stop for our full position. We are in at a stop level of 32.72, which we built by looking at the 50-day moving average and incorporating the average true range. In fact, I need to remind you all about our process. So let me pull up my scratch pad. So here's the rules, essentially, the rules-based trading approach we utilize in this class. We got into Halliburton at a pretty good time, everybody. As you can see, we based it on a significant bounce off of the 50-day moving average, put us in the trade pretty well. Right now, we have, again, bracketed it, so we have a target for us. And while we're not going to elevate or change our target, we do want to increase our stop price. We are currently in at 32.72, and our 50-day is currently 34.54. So if we looked at that 34.54 and we reduce that amount by the amount of our simple average true range, it's $1.22. So that gives us a new stop at $33.32. So we'll be able to increase this by about 60 cents or so. And we're going to do just that. So I'm just going to click and drag and push this one up to about 33.32. Let me make sure. 33.26. That's pretty close. And I'm always going to err on the side of a little bit under my calculation level, just because that gives me more wiggle room. Okay. So we have increased our stop on this one. I have to remind you, if we do get stopped out, you need to know we're not guaranteed on a price, of course, because an execution on this one, it triggers and becomes a market order, and that can happen at any price. So we have gap risk that we need to be aware of. So just be aware and considerate of that. In the meantime, if the stock does spike and gets us into our limit up there at 41.50, well, then that would be fantastic. But in the short term, if it keeps rising for us before getting to that target, we're working to reduce and mitigate our risk as it lies with the Halliburton trade. So that's a good place to begin today, starting by elevating our stops. And remember, when we build our stop orders, we do so with purpose. We do not lower stop orders. We raise stop orders, but do not lower them. Okay. All right. Let's take a look at our next one, Fastenal. Now, Fastenal, we're in a little bit of a loss. I don't know if there's an opportunity for us here, but let us talk about what has occurred. So I get all the time, why ATR, Kev? Why are we trying ATR and below the moving average of my preference by the amount of the ATR? Well, I think that the price action you've seen over the last week, selling down on potential overall broad market weakness, is a good illustration of that. So our stop is at 43.18. We based it on the 50-day moving average last week on the 17th, and we took that moving average less the amount of the ATR and put the stop there. And that's how we came up with this calculation at 43.18. And yet, while the last 4 sessions have all been below both the 50 and the 200, indicating some semblance of weakness here. Yes, we've broken trend to a certain extent, but we do not see that we've been stopped out. So what we've been able to do is to manage the broad market weakness that is not likely tied to Fastenal directly. So because it's broad market weakness, not news-driven weakness or company-specific weakness, terrific. We've stuck with the trade, and we're just a candle away, everybody. If we get a nice move tomorrow back above the 50-day and close above it tomorrow, this is going to look like a successful test of support in this range. So, right away, I can tell you at the close today, we were back above my green horizontal support. So to the moment, it looks like we've managed the Fastenal trade properly. Doesn't mean we're going to hold, and it certainly doesn't mean we can't be stopped out this week or anytime down the road, but it certainly is a good reminder of exactly why we do what we do in terms of setting stops, calculating stops, and so forth. Okay, so we're going to leave the Fastenal order the same. We're going to move on to Archer Daniels next. Now, before I do, I want to answer, Gary, your question. Do you ever raise targets? Absolutely fine. When you are whether it's a bracket or otherwise, you can always raise your exit strategy when given good reason to do so. But the key component to that inevitably is going to be the desire and the need to keep elevating your stop. If you're elevating your target, great, but you got to coincide with an elevation of your exit strategy to the downside, okay? So make sure you're balancing the two of them. Remember, additionally, what if you decided, oh, I've got 100 shares, but I'm almost to my target, I'm going to sell 50 at my target now, and I'm going to stick with 50 that remain. Make certain that you are elevating the stop on the remaining 50. We have to work to tighten things up a little bit after you've sold some, because while you've taken some profits, if you've only sold, 25%, maybe half of your trade, well, it's imperative that we don't then give it back by allowing the stock to fall further than we would have expected. So if you're willing to sell at a targeted level, it's important to raise your stop immediately on your remaining shares. Hope that helps, Gary. That looks like it did. Okay, so Archer Daniels going in our favor. Same situation here, everybody. We've been using the 50-day. Look at how close we came on this one, everybody. Oh my goodness. So our stop is at 64.90. The low from last Friday, 65.07. We missed it by 17 cents. Again, an excellent reminder. Again, I can't tell you it's going to work every time, but I can tell you that it increases our opportunities to stick with the trades. And I hope you're all witnessing that even in this volatile environment, volatile in the sense that we have that elevation to our VIX, It is so important that we build these processes into our trade plan. That's how we can stick with the trade longer. And today we were rewarded because now we got a beautiful candle higher. This is a nice development in the trend above the 50-day moving average after a little bit of volatility, understandably, last week. So this was really nice to see that we held. Now let's recalculate. Our new 50-day is 67.96. Our ATR, I will re-add that here, is $2.51. And that gives us a new stop order at 65.45. So we're going to raise this just by 55 cents. And you know, some of you would say that's not enough for me to raise it, and that would be fine. It is obviously your call, whether you choose to do that or not. I'm going to right-click on this one instead of clicking and dragging. So I'm just going to change my stop here, override it, 65.45. Make sure it stays good till canceled. And that's on the full 100 share position. Sure is. All right. And just to confirm, 65.45, good till canceled, and send. We are good to go. Oh my goodness, we have a survey opportunity. That's wonderful. Yes, thank you for reposting that, Connie. Always love hearing from you, everybody. If you have the time to not just give a score, but maybe let me know your thoughts, happy to hear from you. Every note you make on the survey, that comes directly to us, and that is always appreciated because I try to incorporate that within subsequent classes. So if you have the time to let me know those thoughts, I would love to hear from you, everybody. All right, last new position here we put on last week as well. That's AWK for American Water Works. We got into this one on a belief or potential move through the downtrend line here, but notice where we find ourselves. I think we built this one utilizing the 20-day moving average. Let's put all those moving averages back in there. So we had confluence of the 20 and the 200 right here, and we thought that that could hold up. And when we built this trade, we noted that with the inclusion of the average true range, we had a stop below the 50-day. And that's what we did not mind, because even though we didn't think we wanted to work with the 50-day, the ATR, the average true range, brought us beneath it. So the number today below the 20-day, just do a little view here, is at 136.18. Our ATR is 349. And that means an exit or a stop at 132.69. And we're in at 131.47. Now, this is where we may not elevate the stop today because, again, current stop is below the 50-day moving average. If we go with the adjusted stop, we would be about 50 cents above the 50-day moving average here. And I don't think that makes as much sense because there's always risk for a test of a supportive moving average like that. And I don't want to get taken out on a support test. I want to get taken out on a breakdown. Now, that doesn't mean we couldn't get taken out only to watch it move higher. We know that that's still our risk. But I like that level a little bit more appropriately than, say, elevating the stop 50 cents. So we're going to let this one go. Okay, so there's the market review and the example portfolio review. We're going to spend our final 20 minutes looking at two new example trades based on my standardized scan. So I'm going to just simply open up my dynamic watch list, which I got from my personal grouping here. And I've got one in technology. I think that's what we're in right now. Yep, that's technology. So what I was going to highlight in technology today was Seagate, STX. And yet, there it is, 7% day. Now let's talk about what stands out about Seagate from the trend standpoint, everybody. Really great year, first of all. If I put my labels on, you can see it's had a 54% run year to date. And most notable, I think, for the trend in Seagate as I drill into what's been going on here, is this move out of these highs through these lower highs, right? And then look at all of this action since the break of the downtrend line. What have we done? We've held serve, meaning and implying, hey, we've got a new ledge of support. A couple other things that stand out here, everybody. The 20 and the 50 are basically right on top of each other. That tells us that traders in two separate windows, the 20-day trader, the 50-day trader, both are looking at this importance of the 390 zone as potential support. Okay, so this looks like an opportunity that could be had building in a new position, and it might not be one where we set an immediate target, but it might be one where we set our exit strategy beneath us and let's see if we can stick with it for a long time. The longest position we have maintained thus far was one we started in late December before turning the calendar, and that was on Caterpillar, and we just got stopped out of that one this month. So I think we held that for about 10 to 12 weeks, and all we did was not set a target and just raised our stop each week along the way. Well, that's what we're going to try to do on Seagate here. So we're going to go the standard process, everybody. I hope by doing it over and over, it's really reiterating the plan and the process as much as anything else. So our 50-day moving average, we're going to take it at 390.88. And then we're going to go beneath it by the amount of our ATR. So this ATR is 26 points. So 2601 brings us to 364.87. So that's going to be our stop level. Okay. Now, if we are a buyer at 425 approximately, my goodness, we're giving up a pretty good amount of risk, right? So at 424.87, let's say, we are giving up 50 points. Okay. No, wait, that's not right, Kev. Let me try that one more time. I think that's 60 points. Yep, 60 points. Now, that's okay. In the grand scheme of things, 60 is a lot, but let's just see what it looks like. Where does 60 put us on the chart? So 60 would be 364.87. It would be right about here. Okay. And that would be a significant move below the 50-day, everybody. So the hope is that, we're not looking at a scenario where we need to test this low right here, but rather just holding the 50-day. And I think that all of the action we've got over the last 7 sessions kind of gives the impression that Seagate has an opportunity to hold this ledge. And if it did break the 50-day, maybe it doesn't break it by more than the ATR. All right. And so hopefully we can stick with that. So let's build that one out. Now, of course, $60 of downside means just 10 shares is about a $600 risk factor. I'm noting our tolerance for risk is 1,000. So that means we could probably up that to maybe 15 shares. So if we did so, 15 shares at 426 would be about a $6,400 position size. That's less than our 10,000. It would mean that we would risk about $900 worth. And that would mean it would still fall within our allowances, so to speak. So let's go with 15 on this one, everybody. But again, we're not going to set a target. So let me build this with a right click, buy custom with stop. And so we're going to go in at a price. We're going to elevate this by at least $1. So let's say 426 for our entrance for tomorrow, hopefully. Limit, good for tomorrow. We'll keep it good till canceled, because if there's any chance that we can get into this at this range, we'd be happy with it. As long as we've got our comfort zone for protection, that's fine. And again, look, nobody wants to lose what we are prepared to lose in the trade. But that's why we're putting it on. That's why we're utilizing the protective measure, the stop order, even though we know it doesn't give us a guarantee of the protection amount. We are still working to reiterate our process and our good habits. That's really our key. All right, so going back here, we said from 426 an entrance, and then our 50-day, oops, go back in here. I'm sorry, everybody. I thought I wrote that down, but our 50-day is 390.88. And so we said 2601, and that gives us a stop at 364.87. The other thing I liked about 364.87 is the fact that 87 cents is nice and odd. That is to say, not a round figure. So 364.87 for our stop. And again, that's just the trigger. So no guarantee that that price, if executed, is going to be close to 364.87. It could be a lot higher. It could actually be a lot lower. We have to keep that in mind all the time. Okay, so let's go ahead and hit this one. I need to make sure that this matches up, everybody. We're only buying 15. We don't want to sell 100 if we get stopped out. So I'll click that little icon there, and now they match up. Go ahead and hit confirm and send. All right, our cost is going to be just shy of 6,400, and then our risk factor, we recognize maybe approximate loss not to exceed 1,000, but again, no guarantees. So let's go ahead and hit send, and we are all set for tomorrow's business on Seagate. Now let's take a look. Ooh, you're right. I might need to, you know what? Let's do one quick thing here, everybody. I'm going to change this. Thanks for not just for popping in here, Thea, but also thanks for noting the market move, after hours, etc. We might need to increase this if we want to get into it. So let's just call it 420. Let's call it 429. And that'll give us a little wiggle room there in the hopes that we can get into the position. Again, if the open tomorrow is under 429, we get the lower price. So that's a good thing. Okay. No guarantee of us paying more, right? So go ahead and make that alteration, but that still stays within our tolerance, so we're okay. All right, so there's Seagate. Now I'm going to change to my excuse me, dynamic watch list for industrials. And the one that made the list today, there's some good charts in here, but the one that made the list today is Johnson Controls. So let's talk about this one a minute. And I think you all can see why this one starts to call out to me. And it's got partially due to the fact that we've got it working against that 50-day most recently, nice and cleanly. But it also has to do with the gap move following earnings right here. And notice how the earnings ledge has been held. It was tested and held and off of it. And today, what do we have today, everybody? We've got a hold close above the high of our low day in this retreat. So we might be witnessing something coming to fruition here, and we can justify putting on a trade that gets us started tomorrow morning and puts an exit by the amount of the ATR under our 130.58 50-day moving average. So let's do the math on that. And as I'm doing this, everybody, I'm seeing that we've got about 8-9 minutes to go. And it looks like I'm maybe a little bit faster than I've been normally. So if you've got a question as it relates to our example portfolio or any of today's example trades thus far, this might be a good opportunity to get those into the discussion. So please feel free to do just that. All right, so here we're going to use 130.58 as our 50-day moving average level. We're going to go beneath it by $4.31. I'm rounding up on the ATR. So minus 4.31 gives us 126.27, a nice odd number yet again. Now tomorrow, we're going to need to go up to about 138 potentially so that we get into the trade, and that's okay. So in this one, once more, I'm going to again go with the idea, this is now the weekly look at Johnson, the idea that what we're building is the continuation of a long-term uptrend. So instead of a target for a profit, let's talk about it from the standpoint of get us into the trade and let's see if this one can keep running and we will keep raising our stops. All right, so JCI, we will go in at a slight elevation to 138. And that means that we're going to be risking just a little less than $12 a share. Okay. And we need to make sure that we do not exceed risk of $1,000. So I'm just going to do a little bit of math on this, everybody. I'm going to take my 1173 or $1,000, divide it by the amount per share risk of 1173, and that gives us a maximum of 85 shares. Now, 85 shares at 138 would be too much. That'd be almost $12,000 investment. 11,730. Our full position is $10,000 total. So we're not going to exceed 10,000. Okay. So let's see here. About 10,000 divided by the 138 gives us 72, and we're just going to keep it nice and clean. We're going down to 70 shares. Okay, so I hope you all saw how I did that little bit of back and forth mathematical calculation to figure things out. So we're going to be a buyer of 70 shares at a limit of 138 or better with a subsequent stop order at 126.27. So I'm going in, whoops, let's go ahead and just do this. I'm gonna, and I hope one note here, everybody, I'm going up to the approximate 138 level, and I'm gonna right click from there and hit buy custom with stop. And then notice what happens with my initial limit. It starts at the level that I clicked on. So 138.04. I'm going to go down to 138 even. Good for, let's do good till let's do this one good for tomorrow. So we've got a good for tomorrow's business only. Limit to buy Johnson Controls at 138 or lower. We will backstop that with a good till canceled stop order at 126.27. And that is good till canceled. And again, I need to make the adjustment to the share totals. We are doing a number of 70 shares. And there we go. So 70 to buy, 70 for my sale. And hopefully what we get is one of those fantastic rallies that leads to us elevating the stop nicely, cleanly, and we can take advantage of the potential for a momentum move. And so we'll go ahead and hit confirm. Make sure that we've got all the validation here. Yep, 9,600. So this is really a full position size, everybody. We are not looking to add to this one at any point because we already have, we'll have a fair number of shares and dollars on this trade. So go ahead and hit send. All right. Now, Scotty wanted to hear about that STX trade. So let's just go back and revisit, and let's just once more make sure that we've done the math on this a little bit more closely. So Scotty's asking me to please revisit the stop price on the STX trade. So with STX, we've been watching the 50-day, and I think for good reason here. In addition to the fact that we have broken the downtrend and have then held it for the next 7 sessions, held the 50-day moving average. That looks quite nice. Additionally, what stands out is that when we were below the 50-day here, that was very short-lived, and we got right back into trend with a fantastic green candle that the high for that day has not even been violated yet. So there was some clarity out of the trend here, and the 50-day moving average was more or less reestablished as support. So with that in mind here, what we did, Scotty, is we took 390.88. That's the 50-day value that my cursor is kind of hovering on right here. And then we took that ATR, the average true range, down below. You see here, it's 2601. I'm now pointing at that in my margins, right? So here, 2601, we came beneath 390.88 by that amount. 2601. Okay. And that math comes out to 364.87. And that's where our stop should reside. What did I make a mistake? No. Hang on. Let me double check. Stop, paste. Oh, I know what it's doing. It's saying, okay, so it's making the change. What it did was it made the stop because we elevated our buy limit there. It made the maneuver a slight bit different. It's now working against the open trade price. So let's go ahead and just make sure we change this so that it is exactly where I wanted it, which was again at a stop of a good till canceled stop at 364.87. All right. So this way it's not tied to our entrance as much as the mathematical calculation we did there to ensure that if we get stopped out, we do so at a level we're comfortable with, a loss amount with which we would have comfort. So I'm not sure if that was your intention there, Scottery, but I appreciate it because by forcing me to go back and review it, we've now adjusted the stop to the proper level, and that makes me feel a little bit more confident with it. So I appreciate you doing that. Let's see here. There was one question. Would you, from Jamaican SP, would you advise setting up purchases after market closes? You know, okay, this class, that's really what we focus on because we don't really have an option, right? Because the market's closed when we get to this level. So, and I'm really glad to hear that, Scottery. Thank you. The market's already closed for us. If it were in a perfect world, I would probably be doing this the last hour of the day and give us opportunity to actually enter these trades in the final hour rather than the first hour of the next day or to be waiting for tomorrow's business. But that's what I would be thinking. So, okay, that is going to have to wrap it up for us today, everybody. But nonetheless, love hearing from you all. You have the opportunity for a survey today, everyone. If you'd be kind enough, I'd love to hear from you. Let me know your thoughts in particular about our process, the way we build our trades, everything we take into account in my scratch pad. Always pleased to hear from all of you. Big thanks to Connie in the chat today, and thanks to all of you for joining. Follow us on X, Connie Hill CS, Kevin Horner CS. Hit that thumbs up button for me down below if this was helpful for you, and don't forget to be subscribed to the YouTube channel we call Trader Talks. I will be back with you all tomorrow morning for Trader Talks in today's market. That's at market open tomorrow. So I look forward to seeing you there. Have a great night, everybody.